In the UK, raft of UK inflation data out today with Bank of England, Dove and Regular Monetary Policy Committee dissenter Michael Sanders set to deliver a speech which could offer hints on whether the central bank will vote to cut interest rates later this month. In the meantime, as business leaders and politicians from around the world are gearing up to attend another session of the World Economic Forum in Davos, Switzerland next week, the WEF Global Risk Report is being launched today at the Wall Street Journal in UK. My colleague Julian Olainka is attending the press briefing and will lead us into what this year's report is saying. Hello, Juliana. Good afternoon. Well, this year marks the 50th anniversary of WEF, and its theme is Stakeholders for a Cohesive and Sustainable World. With the launch of the Global Risk Report today, what has been identified as the greatest risk to global growth this year?
Good afternoon, Chemeze, from London Bridge in central London. Well, look, I can tell you there was only one key theme throughout the press briefing this morning, and that was climate change. The risk to the environment is of huge importance. We know that a lot of business leaders have been speaking about this over the past couple of years, but it really seemed to be cemented that more does need to be done. One of the issues that the stakeholders here from the World Economic Forum were discussing is the geopolitical climate and the tensions between China and America, between America and the Middle East, are all affecting the way the world is reacting to the change in the environment. We know that 2019 was the hottest year on record, and what they'll be saying going into Davos next week, Tuesday, is that more needs to be done. They'll be focusing on the public to make a change. Of course, climate change was at the top of the list, but there were other issues as well. Cybersecurity being one of those issues, health infrastructure, particularly on the continent, is an issue. The fact that there are some diseases that are not reacting well to antibiotics. They did speak about Ebola, they spoke about polio and the issues that they have there. But it was quite key that the biggest issue they were talking about is the environment, and quite a pertinent issue for our leaders in Africa, particularly as we rely on one of what they consider to be the dirtiest industry in the world, which is oil and energy.
Well, let's look at the data released today, and that's the UK inflation, which sank unexpectedly to a more than 3-year low in December, signaling the possibility of a Bank of England rate cut. Now, the pound dropped 0.25% immediately after the news. How's the currency at the moment, and of course, the equities?
Well, currencies at the moment, as you said, the British pound is down, slightly down on the dollar by about 0.08%, also down on the euro by 0.19%, similarly down on the Japanese yen. The all share is up 11%, 0.11%. The FTSE 100 is up 0.18%, and the FTSE 250 is up 0.25%. As you said, Chimi, inflation came in weaker than expected at 1.3% for December. That was a drop of 2 percentage points from what was recorded in November at 1.5%. So there are, industry figures that believe that the Bank of England will cut interest rates when they meet at the end of this month. Of course, we already had in 2 previous meetings 2 MPC committee members already showing an interest, and now that interest or the sense has risen by about 10%. So some analysts are suggesting there's a 10%, 60% chance that interest rates will be cut. From other corners, they're saying, the Bank of England should hold fire, that this data was collated at a time where the UK were heading into an election. And, the reality is, Chimeze, even though we do have Boris Johnson winning on a mandate of getting Brexit done, Brexit isn't done, and it's still affecting the UK economy. We also had weak UK GDP data and industrial data. So there are some that are saying hold fire, but it does seem as if, there will be a sway towards interest rate cuts. I think the biggest factor now will be the PMI flash data, which is due on January the 24th. If anything signals below a 50, then it looks like interest rates will be cut for the UK in the first time for a very long time.
All right, Juliana, just before I let you go, let's look at another data out today. That's average house prices in the UK. Of course, it shows that it increased by 2.2% in the year to November 2019, up from 1.3% in October. What does that tell you?
Well, depending on who you talk to, Chimmy, some are calling this the Boris bounce. It appears as if, even though Boris hadn't won the election when this data was collated, all the polls were indicating that he would be winning and that there would be some Brexit ease in the UK. And people were purchasing houses. There was a sentiment that people wanted more houses. And with that, house prices grew across England for the first time on record. House prices, the average house price rose from £250,000, which I've got down here, to £251,000. That was an increase of 1.7% across England. Even in London, where we know the average price of a house is almost £500,000, even there, house prices rose by 0.2%. So this is good news for the industry. Of course, house prices have been lacking and slagging for a very long time. So a 0.2% increase in London shows that perhaps we could be getting out of this stagnant situation.
Well, Juliana, I'm sure you'll get us more update from the WEF briefing later in the day. Thank you and enjoy the rest of the day.